Okay, a little bit about how I approach the markets. I don't consider myself either a fundamental or a technical trader. I take a look. I'm a news junkie. I look at news all the time, and I'm always looking at what the fundamentals are. I don't use them to trade the fundamentals, and I don't sit around trying to pull the trigger and trade the news and do anything fancy related to that. But I strongly feel that traders need to understand fundamentals and why they are collected, who they're collected by, and when they're going to hit. So, I'm always looking at the next day, what the trading calendar is, what's coming up. And so what I do is I put together, a basic thumbprint outlook for what I see fundamentally in a pair. And then until I find something that, significantly changes that outlook, I stick with that. And then I move to the charts, and I let the charts tell me how I should trade. So I try to keep one foot in both camps, fundamental and technical. Here's my fundamental outlook. I don't think that either the Eurozone or the ECB or the Fed are going to change interest rates in the first half of this year. The Eurozone is facing some significant headwinds. They're in a place they've never been before. They've got budget problems with Greece, Iceland, and Ireland. There's a very real prospect of a default in Greece. Iceland is trying to figure out if they're going to pay back their loans to the IMF, and that has ramifications all across Europe. And Ireland has some significant budget issues as well. Especially with Greece, since the European Monetary Unit was formed, there's never been a member country that was going to default. So, how they handle this really kind of sets precedent for how they handle everything else moving forward. So it's definitely on people's minds, and anybody who watched Trichet's press conference this morning heard him pretty categorically state that they're not going to help Greece. I think in the long run, there's probably some behind-the-scenes stuff that'll have to be done, but this is going to weigh on this pair. And every time news comes up about any of these three countries or a default in any of the other Eurozone countries, I think you're going to see the euro suffer. To be fair, the data is mixed on both sides of the Atlantic. We've kind of been hot and cold. 1 month the U.S. will have good data. The next month they won't. We saw some optimism with the NFP in December, and then that optimism was dashed in early January. The euro numbers that come out are doing the same. We're kind of crossing back and forth across the zero line. So I don't really see either currency getting a tremendous boost either way from the fundamentals. I think in the short run, we're going to stay in a range. But I do think that over the 3-month horizon, I'm bearish on the pair, and I believe that we'll see things move down from here. So let's go over and take a look at some of the charts. You want to share me that? So here's what I saw over the last year. The euro was in a pretty sustained uptrend until it reached its top just above 5,100. And then you can see here that it broke that trend line. And at the end of the year, the dollar got stronger, which actually runs counter to several of the past years. The euro has gotten much stronger in December. And I think there were a lot of people that were expecting to see that again. It's not how it went down. The dollar got stronger, 900 points stronger at one, at its lowest area, and now we've come down and we're in this little upward sloping. I don't know. Somebody might call it a megaphone if they look at patterns, but there's, after the NFP number here, we saw a significant run up, but then there was, kind of mixed. This week, same thing. We're still on an uptrend here, but if we look down at the daily chart, you can see the enthusiasm is kind of maybe running out. The lines that I draw on the chart here are kind of the sandbox. It's that I look at. As long as the pair remains within these lines, I'm mainly going to sell resistance and buy support. And it looks rangy to me, but like I mentioned, I believe that we will work our way up here, and we'll sell, and at some point we're going to come down here and break this support. When I look at most of the studies, I'm still bearish on this pair, and so I would be much more comfortable selling at resistance than I would be about buying a lot at support. But on either end of this range, I think there's lots of opportunities for traders. And I think that there are some definite places in the chart that you can see where it would be safe to place a stop, and you could enter a trade with very, very low risk and a reasonable amount of reward. There's 300 pips of range here to work with. So that's kind of the approach I'm taking right now. Keep in mind, at any point, either my fundamental or technical outlook could change. There could be some big event that occurs that nobody's going to see coming that could pop us out of this structure here, up above this resistance, or below, significantly down below this support. And as traders, we have to adapt to that. But I try to have my fundamental boundaries and then my technical boundaries, and as long as we stay within those boundaries, I feel pretty comfortable about what I've done with the pair and how to trade it. So let's take a look here. So